Ever wondered why gold is at a record high despite a strong US stock market and economy? Indeed, it's a fascinating paradox. This precious yellow metal, arguably the world's oldest investment, has a knack for holding its value even when other assets are thriving. It's a story that stretches back centuries through times of inflation and global conflict. So, what's behind gold's current rally? In the next few minutes, we'll unravel this financial enigma for you. Let's take a journey back in time, tracing the value of gold over the past 2 decades. As we embark on this gold-tinted voyage, we'll explore the key moments that shaped its value, through significant rises and occasional dips. 20 years ago, in 2004, gold was considered a reliable asset, but its value was modest compared to today. As we move forward to 2007, the onset of the global financial crisis saw investors flocking to gold as a safe haven, pushing its value upwards. Fast forward to 2011. Amidst economic instability and fears of a double-dip recession, gold hit an all-time high, a testament to its enduring appeal in times of uncertainty. Yet, as economies began to recover, we see a dip in gold's value, reminding us that even the most stalwart investments are not immune to fluctuations. The year 2015 brought another surge in gold's value. Amid global economic slowdown and plummeting oil prices, investors turned to gold as a beacon of stability, driving its price upward once again. As we approach the recent past, in 2019, we see a resurgence in gold's popularity. With escalating trade tensions and geopolitical unrest, gold's value skyrocketed to new heights. It was also during this time that American investors' faith in the precious metal hit its highest level since 2012, according to a Gallup poll. And here we are in 2024. Despite a strong US stock market and economy, gold continues its upward trajectory, solidifying its status as one of the world's oldest and most trusted investments. So, gold has added 394% in value over the past 20 years, a remarkable feat for an inorganic material. This journey through time reveals gold's undeniable resilience and its ability to retain value through bouts of inflation, periods of conflict, and market distress. Gold's enduring allure isn't just rooted in its gleaming exterior, but in its proven track record as a steadfast investment. Gold, often viewed as a hedge against market losses, has continued to gain value. But why? Let's delve into this fascinating phenomenon. The term hedge in financial parlance refers to an investment made to reduce the risk of adverse price movements in another asset. In simpler terms, it is a form of insurance against financial losses. When it comes to gold, it has established itself as a reliable hedge over centuries, particularly during periods of market distress. Now, you might ask, why gold? Well, the answer lies in its intrinsic value. Unlike paper currency, coins, or other assets, gold has the unique ability to maintain its value over time. It is not subject to the whims of government policy or economic conditions. Its value is universally recognized across the globe, making it a safe haven in times of economic turbulence. Investors often turn to gold as a safe harbor because it is perceived as being less volatile than other investment types, such as stocks or bonds. When the markets go south, gold often heads north. It's like a financial superhero, standing strong when everything else is falling apart. Over the last few decades, we've witnessed several instances where gold has proven its worth. During the financial crisis of 2008, for instance, gold prices skyrocketed as investors sought refuge from the stormy markets. Despite the strong US stock market and economy, gold continues to gain traction. It's not that investors are losing faith in the economy, but rather, they are diversifying their investment portfolios. Gold offers a sense of security, a buffer against potential losses in other investments. Furthermore, gold's appeal isn't just limited to times of financial crisis. It's also sought after during periods of geopolitical unrest, inflation, and currency devaluation. Its versatility as an investment tool is truly remarkable. So if you're wondering why gold continues to shine bright in the investment landscape, it's because it has proven to be a reliable, trusted, and resilient asset. It is a testament to the centuries-old adage, "All that glitters is gold." American investors' faith in the precious metal hit its highest level since 2012 last year, with respondents more confident investing in gold than stocks. Interestingly, gold's rally coincides with a fairly flat US dollar. To fully appreciate this, let's delve into the intricate relationship between the US dollar and gold. The US dollar and gold have traditionally had an inverse relationship. When the dollar is strong, gold tends to be weak, and vice versa. This is because a strong dollar makes gold more expensive for foreign investors, which can suppress demand, and therefore the price. But why does the dollar typically gain value during times of market distress? Well, the US dollar is often seen as a safe haven currency. Think of it as a secure vault, where global investors stash their money when things get rough. When the market is volatile or the economy is in a downturn, investors often flock to the safety of the dollar, pushing up its value. However, recent times have seen a shift from this traditional pattern. The dollar has remained fairly flat, while gold continues to rally. This divergence may be due to a combination of factors. Firstly, let's consider the unprecedented global events we've witnessed over the past couple of years, from the pandemic to geopolitical tensions. These have injected a high degree of uncertainty into the market, boosting the appeal of gold as a safe haven. Secondly, there's the issue of inflation. With central banks around the world pumping trillions of dollars into their economies to combat the financial fallout of the pandemic, inflation fears have risen. Gold, with its reputation as a hedge against inflation, has become an increasingly attractive investment. So, while the US dollar remains a key player in global finance, its role and relationship with gold is not set in stone. Market dynamics are shifting, and investors are adapting their strategies accordingly. In conclusion, the US dollar's influence on the gold market is significant, but it's just one piece of a complex jigsaw puzzle. The DXY, which tracks the dollar against a basket of other top global currencies, is up 1% year-to-date and down 2% over the last year. So why is gold at a record high despite a strong US stock market and economy? Gold's glittering performance in recent times might seem paradoxical in the face of a robust American economy and a thriving stock market. But if we dig a little deeper, we find some key factors that contribute to this golden phenomenon. Firstly, gold has always been viewed as a safe haven investment, a kind of insurance policy against market turbulence. Throughout history, it has retained its value during periods of inflation, economic downturn, and global conflict. This enduring quality of gold increases its attractiveness to investors, especially in uncertain times. Secondly, the US dollar plays a significant role in the valuation of gold. The two have an inverse relationship. When the dollar is strong, gold prices typically drop, and when the dollar is weak, gold prices tend to rise. Now, despite the overall strength of the US economy, the dollar has been fairly flat, with only a 1% increase year-to-date and a 2% decrease over the last year. This relatively flat performance of the dollar has helped gold prices to climb. Lastly, we can't overlook the power of investor sentiment. The faith of American investors in gold hit its highest level since 2012 last year. A Gallup poll showed that respondents were more confident investing in gold than in stocks. This increased confidence and faith in gold as a solid investment have undoubtedly contributed to its record high value. So, there you have it. Gold's record high can be traced back to its role as a hedge against market losses, the relatively flat performance of the US dollar, and the unwavering faith of investors in its value. Despite the strong performance of the US stock market and economy, gold continues to shine as a reliable and valuable investment. In conclusion, gold's record high in a strong economy is not as paradoxical as it seems. The allure of this precious metal goes beyond its lustrous appearance. It's a testament to centuries of trust and value, a beacon of stability in a fluctuating financial landscape. Throughout this discussion, we've traced the 20-year trajectory of gold's value, witnessing a remarkable 494% increase. Despite the booming stock market and a seemingly robust economy, gold has proven to be a reliable hedge against market losses, a safety net for investors when other assets tremble. We've also delved into the role of the US dollar, a currency that often gains traction during market distress. Yet in this scenario, we see a fairly flat US dollar coinciding with gold's surge, a phenomenon that further underscores the unique position of gold in our global economy. The reasons behind gold's record high are multifaceted. It's a blend of its historical significance, its role as a hedge, and its independence from the usual market dynamics. These factors collectively contribute to its enduring appeal, making it a robust investment choice. So the next time you wonder about gold's value, remember, it's more than just a shiny metal. It's a centuries-old investment that continues to hold its weight in the modern economy.